The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 21st Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Of course, you can email me, steve@tfnn.com, and you can always send me an instant message in the den, just as SNP just did, and a request to take a look at Apple. So we're going to do that for sure. So let's go ahead and get this show started on, of course, magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow traded up 76 points. She's trading out 18,944. S&P or POI is up 15 points, trading at 2197. NASDAQ Composite up 42 points at 5363. Russell's up 3 points. DAX closed up 20. FTSE up 2. Gold's up $3. Silver's flat, back 6 pennies. Light sweet crude is up $2, trading out at $47.75. AutoZone is in the zone, the green zone, up $21, nearly 3%. Priceline up $20, 1.3%. Amazon up 2% or $15. Alliance Data Corporated Data Systems Corporation up 5%. That's a little over 10. Google's up $10, a little over 1%. Tyson Foods taken in the shorts out here, off about $10, 14% to the downside. Henry Shine down 4%, 666. That's a little devilish price move to the downside. Cubic Corp is Cubic Ruby Red, down $4, down 8% out there. Hope everyone had a great weekend. And great to be back with you. Of course, it's going to be a short, light volume trading week. We already know that. So for all of you, as you are heading out, drive safely. Make sure the person that is driving is just focused on one thing, not their phone, not anything, just simply the road ahead of them. And trading hours this week closed on Thursday, short trading day on Friday. Markets open till 1 p.m. out there. And, Wednesday, we're not going to see much in the way of anything. So it's really today and tomorrow. So we've got a nice move out here today. Let's go see what the pitfalls are, if any, inside of the market. So let's start one of our denettes out there. Should we call it a denner is the guy, a denette is the gal? Is that maybe you guys can help me with how we ought to look at it? Of course, a dudette, maybe that is it, huh? But if we do take a look at the denette, Maria said, hey, inside of the ES Mini, on the 5-hour chart out here, we do have the market singing. And Stevie Wonder's Key of G. You may be saying, what in the Sam heck are either of you talking about? What we do is we take one element of the Chapman wave, and we take a look at that. So we're using that wave count system. And when we see wave count number 7, which is really the same thing as the letter G inside the alphabet, we pay attention to it. Now, we're in that move right now. You do not get a confirmation until the following bar. And if the following bar makes a higher high, then it needs to be the following bar after that. So this wave count in G can continue moving to higher ground really for the rest of the day out here. But we do pay notice. We do recognize where it is that we are at. That means that when I get out there at 2 o'clock, we really won't have confirmation because I'm off the air at 1:57. So we won't have a confirmation of this pattern, but you certainly want to pay attention to it. It's from there that you can see either significant turns or some type of retracement out here. That is what the 30-minute chart for the ES is showing. Interestingly enough, even though we're not in wave G, I believe, I don't think that we are. We can always go ahead and count this out. Yeah, we start right there. I don't think, doesn't look like to me, but what do my eyes know out here? No, we're only in the third wave when it comes to the Tigris. Yeah, Tigris. I think that's what Bud used to call all the tigers and tigresses out here. So that's another approach, simple one. If we take a look at the NQ 30-minute chart, what you would see, Maria, is you won't see a seventh wave move out there. It is nice when we have some synergy inside the market. But what you do see is you do see price moving higher, doing less relative energy. Now, that was the pattern that we saw that began forming right here at 12:30, but the bar 12:30 to 1 o'clock just simply erased that little dark cloud cover pattern out there. So there was no follow through to the downside. And today, follow through to the downside inside any of these equity futures contracts is going to be Stevie's red line that's in the sand, happens to be on my screen out here. That is the oscillator on change line. 48.42 is the number inside of the NQ. You need to see a move below that. Inside the ES, by the way, you might not have taken a note. You will now. It's 21.90. We're trading at 21.94. You get below that, that'll certainly confirm that seventh wave move to the downside. Now, inside of the Dow, up 73 points. If we take a look at the Dow equities futures contract out here, I do not see any pattern that we can hang our hat on. So we really do not have that so-called unanimous decision by the equity futures contracts. Let's take a quick peek over here at the Russell. Had been on fire. The fire has been put out, and as the fire was being put out, price was moving higher, doing less relative energy. Of course, what it did was it formed a nice little bearish reversal signal. So to the extent that the indice that has been on fire, it is also now given us the smoke signals that the fire is out. We say that because when price moves higher, does with less relative energy, or moves lower, does with less relative weakness. That's where we see reversals in the market. Now, these are 30-minute time frame charts that we're taking a look at. Now, in the case of the Russell 2000, not only did it form that little shooting star at 10 o'clock this morning, it also then followed up. So here we have follow-through. So you talk about a market where there's a lot of celebration going on, as I see on the financial channels, a little giddy as they are. The Russell 2000 is the one that's actually given us the largest signal. Not so fast, maybe ready for a timeout before the holiday. So that's the current message. So inside the market, just to recap, on the 30-minute chart, Russell 2000 is saying not so fast. The Dow is not tipping its hat either way or the other. Says, you know what? I'm in the back seat. I'm along for the ride out here. ES Mini has a seventh wave move, and the NQ is moving higher with less relative energy. We need to see more reversal signals, just like we saw inside the Russell 2000. Then you would have a unanimous decision that the market would go ahead and pull back. Pull back to where really depends on the time frame chart that you're taking a look at. Back to the NQ on a daily basis out here, we call it 47.86 would be the number. You're at 48.55 as we speak right now. Now, what else should we be paying attention to in the NQ as we go to break? Well, I'll show you probably the line that makes the most sense out here. That's this one. Because if we take a look at the NQ, price has really just made it back to its descending trend line. And that is at 48.55.50. That's what we're trading right now. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go check out Apple here for S&P inside the Tiger's den. Let's take a look at a couple of different charting tools and see what Apple is communicating to us. Now, we're looking at the market profiles here for Apple right now, and we can see that the top of its daily box is where price is trading over S&P. That is 110.96. As long as Apple closes over 110.96, the message here is moving up to the weekly market profile. Now, that weekly market profile, 114.82. The important thing to notice here as we go ahead and turn off price in both instances, both profile instances, is really what I should say. One of the things that we will notice about these profiles here, let me go ahead and turn off the weekly just so I can show you. Their message, if look, we're just going to see the daily. And inside the daily S&P, notice how this little point of control closer to the bottom of the box, albeit slightly, still close enough, much closer there, that says that really once price got above 107.90, it was telling us first that inside this box it is buyers that are in control, or the bulls that are in control of this price range up to the 110.96 area. So that said that Apple is going to go ahead and test that level. It doesn't tell us whether it's going to be able to break out above that level, but says, hey, that is a level of resistance. So if we come back now, we add the weekly profiles out here. Let me turn off the daily just so that it's clear, and then we'll go ahead and turn them back on for you. If we look at the weekly, we can clearly see that the weekly profile, that point of control, center of the box, is closer to the bottom. That says, hey, you close above that, you close above the daily market profile. There's no reason. It's got clear sailing up to 114.82. Now, that is going to be very good, very positive, obviously, for the NDX 100. That is not the only place, by the way, that the market was communicating to us that even the weighted stocks were going to go ahead and make their move. Let's go take a look at that. Then we'll come back to my other chart out here. Let's go ahead and put price back in to this Apple chart that we're taking a look at. So S&P, is this making sense? What I've just covered for you with regard to price, the market profiles, and what they're communicating to you and I. Now, we're likely to see a price move up into the gap to the downside. That's your real next resistance level. So we should see Apple go ahead and spike the top of the October 26th downdraft session out there, which is really about 115.70. So your price target, depending on where you're at in this trade here, 114.82 to about the the high, about 115.70 out here. Now, the reason that I say that you should see stocks like Amazon and Google and Apple, outperform is simply coming from all the troops out here. And you're saying, what do you mean the troops out here? I want to show you. I'm just looking for the tab. There we go. Here's the tab on my page. We looked at this last week, you and I, right? We started saying about the doubters inside the markets and where they're going to head to. Even though I still am calling for that pullback or retracement, it's the slight retracement, slight pullback. I've never said, never once. In fact, I've said just the opposite, that you should take the short position on this pullback out here. It's too dangerous. There are too many signals that say you're going to be on thin ice out there, and I don't want you on thin ice. Here is a chart with regard to the Qs. Let's get right to the heart of the story. I think that is a Eagles song? I don't know if that's the name of the tune, though, heart to the story, but I know those are part of the lyrics. The top portion of this chart, all right, get to it, Charlie. The top portion of the chart out here is the equal-weighted Qs, right, QQEW, which was already making higher highs out here. It had already taken out its all-time highs from back in 2015. That was bullish. It had taken out its highs from 2016. That was bullish, even though the bottom panel, which is the actual QQQ, the weighted ETF, was not. It is the equal weighted ETF that always tells us the proper story out here. So in storytelling land, with regard to our stock charts, we always want to go pay attention to, hey, what's really going on underneath the covers? Yes, the weighted instruments are weighted instruments, and that's going to be important. But we talked last week about those that were aggressive traders and tried to identify, okay, if you really wanted to go short, where would you go short? Remember, we came to the QQEW series against the Qs. We said, hey, if we looked at the Qs, they're weak. Well, we went over and took a look at the equal weighted. We said, nope, you got to take that off the table. That is way too dangerous. Did I mention way too dangerous out there? Way too dangerous. No, look, by the way, if we take a look at what's going on inside of the equal weighted for the Russell, which, very rarely do you see a divergence here just simply because of the 1968 issues that are there. Look, they're both above their all-time highs out here. Again, closing prices that we're taking a look at right now, because these are the line charts. We're not seeing any problem out here with regard to the Russell 2000. I don't believe we have any problem in the S&P. If we take a look at it, no, we do not. They both are also at all-time highs. So the equal weighted, which is the top portion of our panel, that is the Guggenheim S&P equal weighted ETF out there. That is in good shape too. So with regard to the one last piece of information for us to take a look at out here, S&P with regard to Apple, and there's really a reason I'm showing this to you, and part of it is because of the behavior of the indices themselves, and where I'm anticipating that the market is still, we're going to see price and the oscillator on change line meet. And the reason that we're going to do it, they just have set up the date. Okay, it's a blind date at this stage here because we don't know whether they're going to like each other or not. But we do, and unfortunately, it's been scheduled and rescheduled, kind of like that LSU University of Florida game. LSU, you guys should never have done the things that you did out there. You should have played that game in the swamp. You probably had a better chance of beating that Tiger out there. In any event, to Apple out here. If we take a look at Apple, this is what I want you to notice, S&P. You see we had this nice little crossover right here, this little convergence of CV's oscillator and change line, those two moving averages out here. When you see that, there's typically a pause in price. Now, in this case here, the pause in price basically took a day and a half out here. This is Apple. And you anticipate that price is going to come up and test it, which it did, right? Right here in the trading session of November 17th. But it tests it with a wide-ranging bar. We know markets don't end on wide-ranging bars. I don't recall what the volume was behind that. We'd have to go take a look at it. But really, closing right on that oscillator and change line. The same thing the day next to that. The same thing on Friday, not wanting to give up. Today, you're above it. That is a bullish message as well. Now, with regard to, and this is sneaky, but the markets are sneaky, and you need to understand where that sneakiness is. The next line of resistance, if you are in the Apple trade or an NDX trade out here, you're paying attention to the bottom of that October 6th swing point. That happened to be the beginning of the Tom DeMark 9 count out there, which formed the most recent top in Apple. That was old support that did not act as support. And the question now is that support resistance. And if it is, you should anticipate that could be a little bit of resistance getting up there. But if you're long, you want to see that get taken out. It'd just be one last element that Apple wants to head up to those prices that we took a look at. So even though that was a thorough, I think fairly thorough review of what Apple is doing, it helps to really put in place the different signals that you and I are paying attention to and why we take a look at these markets. And all we can do is anticipate what they're going to do, wait for price to and some of these indicators come together. And if they do, go ahead and take action then. With regard to, say, I don't have any other questions that I know of, but if I do, go ahead and type those in inside the den. I know it's going to be a light volume Monday. Hey, how about the month? No light volume there, is it? Is it a light volume? What about in the financials out here? Take a look at that monthly chart for financials. A to B. Can you say A to B equals CD to the upside? You're talking 1.7 billion shares taken out of swing point. Big time A equals CD to the upside.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Just a commercial was on television. Was just watching it. One of these emergency shelter food things out there. It's always the small little details that sometimes can make you laugh. And so, it's showing all these terrible emergency situations. I don't have the sound on or anything, but floods, this, the other thing, locusts, you name it. And then you had mom out there, and the foods that they were showing, she still had time to go ahead and plate the food, put little condiments and stuff like that on it. In any event, hey, I mentioned the XLF before we went to the breakout here. And if we take a look at certainly where the volume is this month, the month of November, it's only November. What is it? Today's November the 21st out here. And you talk about blowing away a swing point with volume on a monthly basis. It's July 2015. That becomes your swing point high inside the XLF, 787 million shares. And as I mentioned, you're already 1.7 billion. Yeah, B with a B. B with a B, how about that? Because that's pretty clear out there. So if you look at A to B equals CD patterns out here, that on a monthly basis gives you a price projection of $26.95. Ain't no way that's where prices are going to stop. What this says is the financial sectors are finally going to go ahead, or the financial sector is finally going to go ahead and make its way back to its 2007 highs out there. It's about time. It's about space, and it's got plenty of space to do that. That's 22.21 that it's trading at. This is going to get all the way up into that 30.97 level. Of course, if you take a look at the regional banks out here, which one is that? The KRE, that's already above its all-time high swing point out here, which was from back in 2006, in December 2006. We won't even mess with the volumes there. There's so much more volume in it. Now, it has made 100% movable move. So it's gotten back to that level, a sideways move, small retracement, something like that, most certainly can be in order out here. But again, all this bodes well for the Russell 2000 as well, right? Because we know that that's the top weighting inside the top weighting sector inside of the Russell 2000. 90% of it happens to be financials. Now, we have another question out here that came in by email. That was Steve at TFNN.com. This one coming in from Tom says, jump back in a nugget. And Jay Nug Friday, wondering what your thoughts are on the GDX and GDXJ. Also, yen, euro, and dollar short term. Okay, so let's go try to answer those questions out here for Tom. First, let's go take a look. He, in essence, was asking about the GDX. Let's look at the good, the bad, and the ugly out here. See if we can find them all. This was the monthly chart. Let's go ahead and turn this back to a daily chart because Tom is not interested in the monthly chart for GDX. Now, if we take a look at it right now, here is what we know. First, Tom, it's still trading inside of this November 14th swing point. We don't have any market profiles or anything up right now. Not really good news out here. There's 135 million shares on that swing. We're not doing anything today volume-wise. I don't know how we truly gauge volumes today, tomorrow, Wednesday. You can't gauge them at all on Friday, half day, not even, or maybe a little bit more than half day. Wednesday is going to be pretty tough to gauge. So I don't know that we can put a lot of emphasis inside of volume characteristics this week out here. If we do take a look at it, in order to be long the GDX, what you want to see is price close above 21.76. You're at 21.39. Today's high so far, by the way, 21.75. I don't know how that works, but it likes trading with inside that swing point out here, the bottom of which has not been tested. Now we go add our market profiles out here. So if we take a look at those, nothing here to provide us with anything in the short term for us to focus on. 23.12 is the next resistance zone, but that's not the price point that you and I are really that interested in as we speak right now. So that is with regard to the GDX. That's going to really help answer your question with regard to Nugget for the most part and J Nugget. And so my thoughts at this stage are it's not blowing my skirt up. Probably not blowing yours either. You want to see, a little bit more energy to the upside. Now, That is where there is the bigger problem. The good news is, okay, not doing anything either way. Good news is you've made money based on jumping in it on Friday, right? We knew things were pulling back with light volume. We clearly covered that. But you're just not getting a whole lot of giddy up and go out here. Now, the problem is coming. You asked, hey, what's going on with the yen, euro, and the dollar? And our focus really is on the yen, right? So if we do this and then we do that, the do this and do that, if we go take a look at, again, the yen gold bond correlation out here, that happens to be the bottom portion of the chart. So to the extent that you believe that these two instruments, meaning bonds and taking a look at Gold Corp. No, Mike. Dust on a really short-term trade. Yeah, maybe you could do that. Another Denner asking about. So does that mean don't go long the minus? Again, light volume out here. Pretty tough. Let's look at it this way. Let's finish looking at what do the currency pairs tell us, and then you figure out the time frame that you trade on, and and then where you want to take it, whether the risk reward is in it for you. Here is the problem, Tom. Here is something that you need to maybe consider, Mike, and that is if we take a look. So to the extent that you believe price inside bonds or price inside gold are going to be influenced by the Japanese yen futures out here, which I do, you're not going to get a lot of traction to the upside. Now you're seeing, Mike, the absolute total failure for the yen to garner any strength out here. But here's the problem with dust, right? The problem with dust is it's not exactly like you're seeing that thing take off to the upside. I mean, we haven't looked at it yet, but if you know what I mean, right? So you've got an absolute failure in this currency pair, which is influencing certainly the price of gold. That's really what we're just focused on right now. And when I say it's not, when it's failing, I mean, even in the best of times, which was where it's trying to find a bottom out here. This is now the bottom panel. This is a 30-minute chart out here. I mean, it's taken out the lows. It's trading below market profiles out here. Gold, by the way, is also trading below market profiles. In one sense, Tom, I'm saying take the money. Take the money and run. Again, I don't know what you're utilizing as your tools to gauge the trade out here. And I think you are really looking at or thinking in short term, because you even put here short term with regard to the dollar. It's great that gold is held up or that the GDX is held up, but that the miners are holding up. I believe that is sending a signal to us. But, Ben, that signal is not going to get off the schneid out there until we see this currency pair act differently than it is right now. And right now, the only thing that we can do on this currency pair, it's not the only thing, but probably one of the things that we can do is take a look at what's the daily projection inside this currency pair, 6J. Hold on, I'll put the continuous contract up on my screen, see what else is out here. Give me a moment. There we go. And it's given us some bottoming signals, but for goodness sakes, it just hasn't confirmed any of those signals out here. So instead, the pattern that is in play is the A to B equals CD to the downside. And that says price is going to go ahead to the 1.618 expansion of that. And that's going to be at 0.0088998 out there. Sounds like a telephone number. I don't know what will happen. If you call that number, you won't get to me here at TFNN. So, Mike, why aren't the miners trading to the downside if this is an influencing factor? You kind of see what I mean? It's a little ambiguous, wouldn't you say? Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. As I was cleaning up some emails over the weekend, I noticed that on Friday I'd missed one from Sylvia, who had requested to take a look at the SRS. She was, maybe still is, long the SRS, which is the ProShares Ultra Short for real estate out here. And the question was basically, do I still stay in this equity? Now, let me just hit the update on the screen here just to make sure. It looks like, Sylvia, there's a brand new weekly. It is a brand new weekly market profile that has formed out here. Now, I don't know, I don't recall where you're in at price-wise out here. Here's what we know about SRS with regard to price out here. And that is that today, SRS is testing and so far has rejected its swing point out here from November 10th. The low of which is 39.96. We've been up today to a high of 40.14. Volume on that swing is 254,000 shares. Today you've done 89,000 shares out here. Again, like I said earlier, I don't know how we truly gauge today's volume. If we do get a close below that low, 39.96 today, then you have a rejection of a swing point on light volume. That usually says if you can't bust them up, try to go bust them back to the downside. Doesn't say necessarily to short it. I mean, you could. This could be a small E to B equals CD to the downside. I can show you what that looks like out here. I'm not calling that as the pattern, but it'll be interesting to see where that actually takes us in price. And that would give you 37.19. The reason why I say it's interesting is because this new weekly profile would suggest your support will be at 37.47. So I don't know how long you've been in that trade out here. That's if, in fact, price closes to the downside. I would look at, let me do this out here. Let me get, somebody had asked about the dollar. We can go take a look at that. I think that was Tom. But I'm going to switch over on this chart here to SRS. Let's go see where the oscillator on change line is. Well, you're trading below that right now. So that's actually interesting. SRS. So that's really priced at about 40.55. That's not a positive, by the way, the mere fact that it's trading below that level. So this actually would suggest to me, Sylvia, that you should anticipate a little bit more of a pullback I think you were looking to maybe flip positions, right? Go into the IYR. Not necessarily making that call here either. I hate, not that I hate it, but what's just not great is when you have a lack of information, such as a trading volume standpoint. But if you did want to flip, I can see why you would want to do that. You certainly wouldn't want to see the IYR close under 73.27. That's for sure. But I don't know exactly where you're in on your position. So I think what's best for me to do is give you the parameters. If you are committed to the SRS trade, just anticipate a retracement, to maybe about 37.47. As long as it doesn't get below that, you should be okay inside of that trade out there. Back to the dollar, the king of beers out here. Let me go put the U.S. dollar index back up on this chart. We covered this last week, probably during Tom's show. But if not, we're going to cover it during this show here, the Trader's Edge. And, it still looks like this thing is losing steam. We saw 3 Tom DeMark counts show up during the week last week. TD Combo, that's a red 13 count. TD Sequential, that's a blue 13 count. And the TD Setup, that is a brand new 9 count. Each of them occurring last week, Wednesday, Thursday, basically. Now, we have not received a confirmation that that is a turn. We had it earlier when we saw the U.S. dollar index generate a bearish reversal signal, perhaps mostly due to the yen, which was getting strength out there, garnering strength. But that has since dissipated, as we took a look at just a short time ago. So there is no reversal signal here inside of the U.S. dollar index. We've got signs, we've got indicators to tell us, maybe I'm ready. We just have not seen a candle formation to tell us that that is what's going to take place out there. So I hope that answers the other question that you had, Tom, with regard to the U.S. dollar index. Excuse me, give me a moment there to wet my whistle, so to speak. Okay, what do we want to look at next? I don't go ahead, type something in the den out there. Give me some kind of direction. For something that you'd like to take a look at out there. I can get the words out of my mouth eventually. Okay, I don't see anything else inside. Oh, I got to just turn to the right page, actually. Let me just make sure out here. No, I don't see any other requests out there. All right, so let's go look at some individual equities until we get some requests out here. Let's go take a look at AutoZone, see what it's doing. AZO is the ticker symbol. Up nice today, big wide range of bar. So I guess we looked at AutoZone because I wouldn't have had this descending trend line on my chart. And so this must have been a couple of days ago when we saw AutoZone go ahead and take out that trend line, as well as close above its TAS weekly profile out there. So AutoZone right now trading into its most recent swing point from September 27th, doing it with really light volume, 794. That's how many thousands of shares were traded on September 27th, and today you are at 200,000 shares. Nonetheless, it's not as if this is a bearish setup out here, and price is likely to head higher. You may say higher to where, and I will just simply take a look at some retracement levels. That's what I would be gauging the next area where price will head to. Well, that next price area to head to happens to be the 0.618 retrace. 618 retracement, 781.69, and above that, which is more likely than not, you're looking at 798.33. That is on ticker symbol AZO. Priceline is up about $22, 1.5% out here. Let's go see what Priceline is doing. I believe we talked about this as well. Priceline had pulled back to its breakout area. The breakout area was the gap, which is your friend. 1.5 million shares to the upside. Price pulled back to the breakout area on 800,000 shares, so nearly 50% lighter volume on the pullback. And now what we're going to see here is Priceline go make another run for its highs out here. 1583 is where it's headed to. Really a part of the makeup of what you and I looked at inside the NDX 100. We're really underneath the covers. Things are just fine. They're hunky-dory inside of the NDX 100. It was just, a few of the big players out there where some profits were taken. But otherwise, everything else inside the NDX 100 looks mighty, mighty fine. Let's take a look at Amazon, see what it's doing on its move up today. Should be with light volume. How could it not be with light volume? 2.9 million shares headed back to actually volume is pretty good. What do you mean it's pretty good? Well, this thing, I take that back. Not so fast, Steve-O. Look at the right candle. This thing had gapped down back on the trading day of November 9th with 8.5 million shares. You're up with 2.9 right now. Nonetheless, you're going to see Amazon at least make a run for, I would have to call it 847.21. You're trading at the 776.51 level out here. Of course, what we know about Amazon is it formed its first Gartley buy pattern in really quite some time as it was making the low back here. Never got down to the 1-to-1 extension. Yeah, I kind of missed it by that much. As Don, is it Don Knotts? Is that who was the guy? Was that Don Knotts at Get Smart out there? Missed it by that much. That much being 701.88. It actually got down to a price level of 710.10 out here. But Amazon looks like it wants some higher price. So then how is the NQ going to go ahead and turn south, with that price relative strength divergent pattern? Well, one of the ways it will continue to head north is it won't actually form a bearish reversal signal, which we take a look at that 30-minute chart here. Got 10 minutes to go. It ain't happening right now. Continues to move higher, doing it with less energy. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
My be the last ticker symbol that we take a look at. But Dennis in the Tigers Den wants us to go take a look at Wells Fargo. WFC is a ticker symbol, and try to figure out what it may be doing out here. So let's start with the longer term picture. And I want to start with a longer-term picture, Dennis, because both you and I looked at the XLF, right? So we know that the sector is simply on fire. And even with regard to the problems that Wells Fargo has had, maybe those problems have been laid to rest out here. But the XLF, if we're just going to use a swing volume analysis, and we're going to say if you pass a B point with volume, which it's done it, been in stellar formation, whatever in the heck that means. I mean, it's blown away the swing point with volume out there. The financial sector says it wants to go higher. So with regard to, trying to fight that trend out here, I mean, that's what you would be doing in trying to take a look at Wells Fargo to the short side. So that's just the first thing. We looked at the regional banking sector. That is strong like bull out here. It's breaking above its all-time high. So there's not anything bearish that we see inside the sector itself out here, right? So that's something that I think is always important to take a look at. Now, with regard to Wells Fargo, it's as if the market knew that there were problems under the covers well before they were really publicized and got up to the hill out there. That was taking place during the month of August back in 2000 and I believe that's 2016. It's got to be. Yeah, it's August of 2015. Why do we know that? Price was moving higher, doing less relative energy, nice big old bearish engulfing candle set up in August of 2015. That's really what set up the move lower out here. Now, with regard to the monthly move lower, wave counts, only 3 wave counts to the downside. Not a big deal out here. But where price did make its way back to is one of these. We talked about this earlier. We talked about these Tom DeMark 9-count setups. And in this case here, you see a red line out there that should have been supported right now, basically has, in fact, acted as support. So the monthly chart out here, we have seen, in essence, the move to the downside, maybe the only move to the downside out here thus far. Now, again, longer-term chart, right? I just want to make sure that we get the longer-term picture. Then it makes it a little bit easier in fine-tuning on the shorter term. One last thing on the monthly chart. That's this out here. And if we take a look at a trend line, the trend line from March 09, that's my touch point. My next touch point is basically the low from October 2011. We can see that trend was broken. And right now we see that counter-trend rally inside Wells Fargo is right trying to get back inside that trend, much like the Dow did. The Dow back in February broke that trend and then got back inside it, and ever since then it has been off to the races. So this is up at a resistance spot out here. I will say that, Dennis, but again, the overall sector has a lot of strength out there. From a daily perspective, let's put the daily charts up on our screen out here, and let's go take a look at some market profiles, see what they communicate to you and I. Let's go turn off the trend line. Let's go turn on the market profiles. And here's what you and I know at this stage, both market profiles as well as a volume scenario. The volume scenario, we're going to go from the downdraft that formed out here on the trading day of January 4, 2016, 25 million shares to the downside. So that certainly is resistance. That's resistance 1. Resistance 2 is the top of the January 4th session at 53.27. We know that volume coming up into that area. Well, we don't know it, but there was about, oh, shoot, son of a gun. Here's what we know. The downdraft was with 25 million shares. Price had pushed up into this a few days ago, 4, 5, 6 days ago, with volume out here. Profile-wise, this is above the TAS daily profile. I think you're playing with dynamite. Dennis. That's the way it looks like to me. But just have your stop on the other side of 54.22. Have a great day, folks. We'll see you on Terrific Tuesday. Stay tuned for our favorite polar bear, David White. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.